Hey everybody, welcome to another episode of the Real CFO Project. My name is Chad Brown, CPA, flying solo today. And here at the Real CFO Project, our goal is to educate you, help you start thinking like a CFO. You know, small business, medium-sized businesses can't afford, in a lot of cases, a true CFO or even a fractional CFO. But that doesn't mean that the business owner, executive team, management team can't start thinking like a CFO. So that's what we try to do here. We have guests on that will pour into you kind of knowledge of how to think like a CFO, do things like a CFO, compliance, forecasting, budgeting, those sorts of things. So today I'm flying solo. It's just me because I wanted to provide a little bit of education regarding a tax credit that not many folks take advantage of, especially in the small business, small and mid-sized business community. And that tax credit is called the Work Opportunity Tax Credit. Now, most of the time, the small businesses and mid-sized businesses aren't taking advantage of it. Is one, they simply don't know about it, right? And two, they say it's not for me, it's for the big dogs. The big dogs get all the tax breaks and everything. And that's not entirely true. It is true that the majority of the big businesses are already taking it. The majority of the small businesses are not. So let's start with what it is. Well, the Work Opportunity Tax Credit is a federal tax credit available to employers, okay, for-profit employers, that hire individuals from certain targeted groups that have faced some sort of barrier to employment. Maybe it's single motherhood, right? So you got a single mom at home, faces some barriers, right? Daycare, transportation, all of those things. So they may be on some form of assistance, right? So it incentivizes companies to hire individuals like that are receiving some sort of assistance to provide them training, a career path, things of that nature. So understanding that sometimes those hires are a little riskier than others because they do have some of those barriers. There's an incentive for you to do that. Okay. Like I said, it's designed as an incentive for hiring those individuals to promote, that workforce diversity and reduce the unemployment among those groups that do have barriers. Now, let's talk about the value that could come from a credit. Well, it ranges, right? The value could be somewhere between $1,200 and $9,600 per eligible new hire. Now, there's levels to it, right? They have to qualify for it. They have to work a certain number of hours, right? And then you calculate the tax credit based on those things: eligibility, number of hours, and wages. Okay. It's available to businesses of all sizes. So for me, for instance, have a few small businesses. I think we just generated in the last cycle $10,200 in WOTC. Some of that was intentional. Some of it was we hired somebody, they fell into that qualification bucket and worked for us full time, and we generated a significant amount of credit. It is a dollar for dollar credit. It's not just a deduction, right? Meaning your tax is $10,000, you got $5,000 of Work Opportunity Tax Credit. You reduce that $10,000 by the 5 and you pay the 10. It's a federal tax credit. Some states have variations of that they offer. As you'll see with a lot of these credits that we're going to start talking about and educating on, states have different rules and stuff, but a lot of them mirror. So mirror the federal or the IRS standard. So let's jump into who qualifies. Well, to qualify for WOTC, new hires must be from one of these eligible groups. So veterans, especially those that are unemployed or with service-connected disabilities. That's a huge category, especially with the wars that we've been fighting or got out of the last few years. That's a large group, and that's one that will generate, depending on certain variables, that $9,600 tax credit per individual. Long-term unemployed individuals. That means they've been unemployed, haven't worked at all for 27 plus weeks. Okay. Recipients of government assistance, that's your TANF benefits, SNAP benefits, SSI, so temporary assistance for needy families, supplemental nutrition program, supplemental security income, ex-felons, right? Designated community residents. Those are empowerment zones, renewal communities. Those are set up kind of across the country, and some businesses that fall in there should definitely be taking advantage of this credit, because it simply is they live and work within that zone. Anyway, VOC rehab referrals, folks that are part of VOC rehab program, summer youth employees. Those are the major categories. Now, under each one, there's different variables and layers to it. I'm not going to go deep into the weeds. That's something that, whether us as your consultant or someone else, or you on your own, take advantage of it, you can dive into those granular details. But I'd be happy to share some more information one-on-one if you have any questions. Now, here's the big question. How do you take advantage of it, right? How do we say, okay, all the big dogs are doing it because they have the HR departments, they have the resources, let's just say human capital to do this, because it seems like it's overwhelming. Well, it's not. You basically have to follow a program. The program is a federal tax credit. The IRS, like I said, there are some states that have caveats for the same program at different levels. But in order to implement a system in your hiring, you have to work with the state in which you're located. So that State Department of Labor has been appropriated funds to handle the management of the program by the federal government. So your state Department of Labor, Workforce Development, their website, they should have a blueprint of how you do it within that state. Now, just like anything, right? You might not do your own tax return. In many cases, if you're a small business owner, you don't do your own tax return. Same thing goes here. Sometimes you don't have the time, wherewithal, knowledge, and discipline necessary, or the resources internally to do it yourself. So there are consultants out there. Full disclosure, I do have a company that does screen and process for this tax credit. It makes it easy for everybody. Anyway, so you integrate a screening program into your hiring process. One key point, the screening has to be done on or before the date they start work. Okay, very important. So that screening process will have them go through a series of questions to essentially complete the IRS Form 8850. And it has to be signed and dated completed on or before the date they start work. So that form has to be submitted in the means in which the State Department of Labor requires. Typically, it's online now, within 28 days of their hire date. Okay. So once you get that screening, you get the document submitted, it goes through a process at the state where they're going to determine if this individual is indeed eligible in one of those categories we discussed earlier. So if they are eligible, the state will then, and every state's different. Let's say, for instance, the state of Nebraska might be 2-3 months processing time, right? So you submit somebody today, it's the last day of July. You might be August, September, October. You might be the last day of October, somewhere in those time frames, before you'll get what they call either a denial, saying they don't, or a certification. Okay. Now you get that certification. Now you've got kind of the standard. They qualify for that tax credit. The next step is to work with your payroll provider to track those hours and the wages paid. So once you've done that, you track your payroll company, or you internally, however you do it, you have to track the hours worked and the wages paid. Most of you have that either internally or outsourced. You then make sure that you identify that individual certified. And once they hit 120 hours of work, you're going to get a credit. So they've been certified, they hit 120. Those are the two variables to know you're going to get some portion of a credit. Right? Now, if they work 120 hours or more, up to 399, and quit, okay, you're going to get 25% of the first $6,000 in wages. So let's say they hit 200 hours, they terminate, and you paid them $4,000. You're going to get 25% of that $4,000 as a tax credit. Now, let's say they hit 120 and they're still rolling. They're still working with you. You know you're going to get a credit, but you don't know how much, because if they hit 400 hours, that credit now becomes 40% of the first 6,000, or up to $2,400. Now, long-term recipients of food stamps, certain classes of veterans within the program and those targeted groups can qualify for a greater tax rate, up to $9,600 in some cases per that employee. So we're not going to get into the weeds, that sort of thing. So the idea is to retain those employees. So if you retain them for 120, you get 25%. If you retain them for 400, you get 40%. At that point, as soon as they hit that, we calculate the credit, or you can calculate the credit. The credit can stack, right? The more people you hire that are qualified and work, the better it is for you. So how do you maximize the program? Well, you can maximize the program by contacting your workforce development agency or Department of Labor and say, hey, I've got these opportunities out here. I'm looking for folks that have been unemployed. Can you help me find them? And maybe you create a channel to get employees. You can work with, I know several businesses that we work with, work directly with the federal work release program, right? These are often folks that have been convicted. They're now in a work release program. And a lot of times it's drug charges or other charges that, folks really need a second chance, right? All of us screw up. So it's an opportunity to work with those programs and get these folks back into the working population, ingrained with purpose, career opportunities, income, coming out of that situation, we can get a tax credit. So you can work with your local work release program to do that. A lot of agencies that are helping single moms find jobs, right? You can be that employer that they send them to. And if you implement it correctly, and I'm not saying, hey, just go hire these folks so they qualify for a tax credit. No, you can't just go hire people because they qualify for a tax credit. You hire people because that's what you need for your business. They fit the culture, they can do the work, and they don't bring any drama or bullshit to the office, right? Those sorts of things. Hire the right individuals, but I'm saying source leads, source interviews from these areas that will qualify or have a higher likelihood of qualifying for these tax credits, and screen them to see if they do, and hire the right person for the right job. But I guarantee you there's good people out there that are in need of work that qualify for this tax credit. There just simply is, or it would not exist. Okay. So I'd like to see all of you guys, because everybody that listens to this is a small business owner for the most part, or entrepreneur, start utilizing these programs that these big dogs are, and quit complaining that, hey, the big guys get all the kickbacks, all the tax breaks, all the breaks. No, we get them too. We just don't intentionally operate that way to maximize them. So let's start thinking like a CFO. Let's start maximizing some of these niche tax credits and reduce our tax burden. Listen, a lot of the tax planning and strategy out there is simply deferral. It's great. It manages your cash flow. It reduces the outflow. It helps you reinvest to create wealth and legacy. That's great. But a credit is 100% reduction of tax. You don't have to claw it back and recognize it as income down the road. There are some rules regarding wages and stuff, but it's not a huge deal. It's a credit. Start looking for credits. Start doing the things intentionally you can to reduce your tax burden with work opportunity tax credit, research and development tax credit that we'll get into here in a couple of weeks, some deferral mechanisms, oil and gas, several things. Have a little bit in each bucket. And before you know it, you're going to reduce your tax burden significantly. So don't sit around and complain about the big guys getting it when you can get it too. You just have to be intentional and implement a simple, effective system in your business to start capturing these tax credits. Hey, that's all I got today. I know I started preaching a little bit there at the end because it burns me when I see how many credits are being lost year after year after year by all these small businesses because they think they're not big. So I encourage you, if you have questions, holler at me for sure, but start looking at it. And I don't care whether you want to work with us. I mean, I have a company that helps small businesses implement the program, set up a screening process where we screen them. We determine if they're eligible. We submit the information to the state. We get the information from the state on certification. We get the wages. We calculate the credit. Simple. All you got to do is put them in front of a computer, the new hire, or on the phone to screen. That's it. Simple as that. So don't make any excuses anymore. Again, I appreciate you taking a minute to listen to Real CFO. Our goal is to educate those small, mid-sized business owners that can't afford a real CFO to start thinking like a CFO. And that's what the Real CFO Project is all about. So anyway, till next time, appreciate you guys.